Nigerian stocks have rallied and crossed the psychological threshold of 70,000 points for the first time ever. The all-share index climbed 1.94% to close at 70,581 points after stocks gained for the third straight session. Since President Bola Tinubu launched his administration's economic reforms, stocks have gained 35% as local funds have piled back into equities. Despite the recent rally, foreign investors have stayed on the sidelines. Well, joining me to unpack this is Oladipo Ajayi, the head, fixed income and forex, Chapel Hill, Denham. He joins me from Lagos. Thank you for joining me today.
Yeah, good morning. Thank you for having me on.
Well, when the all-share index crossed the 69,000 psychological mark on Tuesday, many knew it was only a matter of time. Personally, I felt like it was only a matter of time before it would get to, 70,000. Would you say that happened earlier than expected?
Of course, I wouldn't say that because when you look at the momentum in the market, it tells you that just like what you said, it's just a matter of time. We expect that to happen. And don't also forget that this is more like results season. We've been seeing a lot of companies releasing their Q3 results. Most especially banks, they've been shunning out great results. And that is diverse from the fact that they enjoy that huge FX evaluation gain half year. If you dissect their financials by Q3, we also can see clearly that beyond the FX gain, that they've also improved on their interest earning income. And when you look at all that in totality, we knew that it's just a matter of time for the ASI to actually cross that 70,000 mark.
Well, for you, what's the significance of this new high and how does it compare to what's obtainable in other climes, Africa especially?
Well, for a long time, we've been saying the Nigerian market is highly underpriced. And when you look at it from the perspective of the fact that for a long time, our economy has been closed. Well, I mean closed because of the rationing of FX and because of the current FX crisis that have been long-standing. We have issues where a lot of foreign investors are actually leaving Nigerian markets to also actually friend other African countries. And we knew then that it's just a matter of time because we know that there's a lot of value in Nigerian markets. And that's one of the reasons why we keep pitching Nigerian markets to most of these foreign investors. And the most alarming thing is the fact that, as we speak, when you look at the mix between foreign investors and local investors, local investors are currently having over 90% holding in the local markets. And it also means that a lot of local investors are now having more confidence in the equity markets. When you look at what happened in 2008, a lot of people actually ran away from the market because of what actually happened in 2008. But what has come to mind now is the fact that a lot of people are now returning to the market, knowing fully well that the market is a very good place to actually reward. And considering the fact that the fixed income market cannot actually reward you, considering the level of inflation that we're currently having in the country, a lot of fixed income investments keep actually turning negative real return. So a lot of portfolio investors are currently looking for positive real return, and that's one of the reasons why we have seen this huge performance in the equity market.
Interesting. Now, from mid-second quarter of 2023, that's from the end of May till this moment, we are seeing significant rally in the equities market, and some have largely attributed this to the policies of this current administration. But beyond this, what other factors do you think, apart from the earnings, the results that have been released recently, what other factors do you think are responsible for the sentiment that the equities market currently enjoys, locally especially?
Also, just look at, based on what you just asked now, you and I know that the key thing is about the policy, and that's actually what actually kickstarts this huge rally that we have seen in the recent past. And coupled with that, also the earnings and also the exchange gain that actually accrue to most financial institutions are also one of the catalysts that actually push the market up. And another thing that I actually mentioned that earlier was the fact that inflation is actually north of 26%. And for you to actually improve the level of your portfolio, your return must be more than 26%. And currently, there's no any other investment where you can get 26% as we speak now in the country aside the equity market. I was just looking through some of those names in the banking sector sometime last year, and I saw that UB has returned over 170%. Access Bank has returned over 100%. Stanbic has returned over 120% in just one financial year. So it tells you that the equity market is actually very rewarding because it actually be able to actually beat the current inflation figures. And that is the key thing that most investors are currently looking at. And for me, we've not even seen the end of it because as we speak, when you look at when you look at portfolio management in country, what comes to mind is the pension fund administrators, and they are sitting on portfolio worth about 17 trillion. And based on the research, it shows that just about 7% of their portfolio is what is invested in equity market. That's just like a little bit over 1 trillion. And imagine that these portfolio managers now try to increase the allocation to the equity market. It tells you what will be the outcome, because it simply means that what we are seeing, we have only seen is just the tip of an iceberg. And also, let's also look at the fact that based on what the current government is currently working on to actually create return sanity into the FX market, and aftermath, if you are able to actually lure foreign investors into the market, imagine what would happen. It simply means that it's not impossible that we hit 80,000 mark anytime soon. So the headroom is still very much there, and I still feel that most Nigerian stocks are actually underpriced.
Well, let's take a sectoral look at all of this. You've talked about the banking sector, but beyond the banking sector, what other sectors are enjoying investors' patronage, and what's the drive?
So, if aside the banking sector, there are also other names. You look at consumer names, and under consumer names, you look at NASCON. NASCON has given return of about 415% this year. You look at Dangote Sugar. Dangote Sugar has given about 286% this year. You look at Boa Food. Boa Food has given over 200%. If you look at the issue between NASCON and Dan Sugar, sometimes in August, Dangote Group came out to say they are looking at any margin, the margin NASCON, Dangote Sugar, and also Dangote Rice together to make a company as Dangote Food. And since then, we've been seeing that aggressive move in that name. We've been seeing aggressive interest in that name, and that's actually pushed the prices of these stocks northward. Also, if you look at the oil and gas, you look at MRS. MRS has gained about 670% only this year. We have seen Japan return about 360%. We also see corn oil actually return over 200%. And you and I know that the oil and gas sector is actually currently booming. Oil is north of $90 now, and it means a good one for most of the practitioners in that industry. Also, if you look at those people actually playing in the downstream, also the removal of subsidy is also a plus for some of them because it gives them a better margin than what they used to actually make in that industry. Also, you look at the agricultural sector, you look at Presco, you look at the FTN Cocoa, and you look at livestock. Those are some of the good names that you see in the market as to speak. Also, if you look at ICT industry, you see Charms actually returning over 1,000% in just one financial year. And you see also CWG also doing about 720% in the ICT industry. And you and I know that the world is moving aggressively towards digitalizing the global world. And this is more like a plus to most of these companies playing in this segment of the country. And also, if you look at the service industry, you look at the Transcorp Hotel as well. They are currently doing very well. They've returned about over 600% this year. So if you look at it across board, it's actually a win-win across board for most of these companies. So it's not peculiar to the banking industry, but across board.
Absolutely. Well, still talking about, these foreign investors, we talked about how that they are staying by the sidelines, and this is related to Forex. Now, the federal government has concluded a plan to securitize about $7 billion, and that's part of the country's dividends from NLNG. So talk to me, what impact do you think this will have on improving Forex liquidity and probably attracting these foreign investors?
Yeah, as we speak, this morning, just before I came online, there was a release from the banks that the CBN has started meeting the forward agreement, FX forward agreement due to most of these banks. And it's actually a big plus to the market when you hear such news coming to the market at such a time like this. And also, back to the fact also, you're expecting about 7 billion from LNG. It means that the central bank will be able to meet obligation, be able to clear some of the backlogs, and be able to retain confidence into the market. There are news already flying around that Emirates may be returning back to Nigeria anytime soon. That is, the central bank has already met 50% of their backlog. So these are some of the things that the foreign investors have been waiting for on a daily basis. They keep asking what is happening in the FX space, what's happening in the FX space. They want to know how far we have gone. And when you look at the report released by JP Morgan, they also mentioned that everything is set. The only thing that is actually keeping people at the doorstep is still the issue of FX. And in as much that the central bank continuing in this step to continually aggressively attend to this, we feel that it's just a matter of time. We'll start seeing most of these foreign investors trooping into our market. So for us, we feel that the market is actually still open for any investor that still want to come in because there's still a lot of upside to some of these names.
I like how you are talking about the equities market. I'm just wondering what is the case for the fixed income market?
Yeah, the fixed income market as we speak is more like a lot of people are staying at the short end of the curve. We are currently already seeing more like an inverted yield curve as we speak. Just on Monday, the central bank was in the market with a 400 billion OMO request. And at that point, they actually issued a 365-day paper at a 17.5 discount. That's about 21.2% effective yield. And it's not only that, they also came back yesterday to also offer OMO bills as well. And we saw the long end about 349 days that was issued. It was issued at 17.98%. That's effective yield of close to 22%. So what this simply means that the monetary policy guys are already moving rates up, and that's in tandem with the requirements of most of these international financial institutions. They actually applauded Nigeria of our decision to remove subsidy and also harmonization of FX window, but they feel that the only thing that's still lagging behind is the issue of inflation, and the only way that they feel we can actually curtail that is to also find a way to actually combat that with interest rate instruments, and that's exactly what we are already seeing. So now, at the short end of the curve, we are already seeing like close to 20% return, but on the long end, it's more like a 2053-year bond. We are still trading around 70%. So
I know how passionate you are when it comes to the fixed income market. Now, very quickly, I like that you mentioned JP Morgan earlier. Now, a JP Morgan analyst actually mentioned that Nigeria now ranks highest on their high risk reward. That's their high risk reward scorecard due to elevated carry. Do you share the same sentiment, and what does this imply?
Of course, it simply means that when you look at the risk reward ratio, now it's actually very high. It means that when you compare the risk you are taking in Nigeria and the reward that comes with it, it means that the reward currently outweigh the risk, and that's one of the reasons why they are saying we rank as one of the highest. So it means that, that's why I mentioned earlier on that it means that we are all set and the market is open for investment, but just the only thing that's actually determining most of the foreign investors is the issue of FX. They want stability in the FX market. You don't want to actually go into a country where the FX market is still very much volatile. You don't want to go into a market at 800 and just a matter of days, the currency is already trading 1,200. So these are some of the concerns that are still very much on the table. And just like you mentioned, the arrival of $7 billion and coupled with the $3 billion expected from Afrexim Bank, we feel that this will be more like an absorber that could help pushing the effect of this and bring a bit of stability in the FX window.
Thank you so much, Oladipo Ajayi, for sharing your thoughts with us on the show today.
You're welcome.